Hello guys, welcome to Trader Smart Stream. In today's video, I'm going to talk about Laurel's market structure foundation, which is called the advanced concept. In this advanced concept, we are going to look at intermediate term strategy. The intermediate term strategy is one of the most powerful trading strategy that you have ever come across in the financial market. This is because without the intermediate term strategy, market structure foundation is empty. It's like a wall of emptiness. Once you understand this, it's really all about nesting swings together, fitting the piece of puzzle into their proper places to give us understanding of the structure of the market activity. The beauty about this intermediate term strategy is you can identify it at all time and for all the markets, whether the trend is based on a price structure or up and down. It's all about fitting the puzzle together. So the first of all, what I'm going to explain this strategy to you, and I'm going to talk about the entry, the exit, and the stop loss. This is what we are going to cover in this video. So what is intermediate term strategy, or the intermediate term highs and lows? I've already made it clear on my previous video that intermediate term highs and lows is called as a reversal for us to know when the market is being shifted from the bullish to the bearish, from the bearish to the bullish. It's vice versa. So what am I saying in this video? I want to make it clear to you about market structure before I dive into our entry model in details. It's all about the entry model. So first of all, what is swing displacement? Before we talk about swing displacement, most people don't really know what is swing displacement. And if you don't know what is swing displacement, a swing displacement is a simple term which is called a short-term swing in the market that move from high to low or from low to high in the market. This is what is called market structure, breaking of the previous high and breaking of the previous low. So you understand what I'm saying? First of all, these swing displacements has what is called the daily candlestick sentiment in the market. If any trader is looking for a way to buy in the market, all you have to do is to look for a daily candlestick sentiment in the market. This daily candlestick sentiment in the market is either short-term, intermediate term, or long-term market structure. Most people are not aware that the short-term highs and lows in the market on the 4 hour represent the SMC on the 1 hour. This is shocking to you guys now, because the intermediate term highs and lows on the 1 hour is a long term. The intermediate term highs and lows on the 1 hour also represent a long term highs and lows on the 1 hour. Are you getting me? So this short term highs and lows on the 4 hour is a daily candlestick, and the daily candlestick pattern is what form the 4 hour short term highs and lows in the market, while the intermediate term 1 hour form the 4 hour candlestick in the market, while the long term meanings form the 1 hour candlestick in the market. Are you getting me? The reason why I said these are all about SMC, advanced SMC, because this is one of the most powerful trading strategy. After you understand what is short-term highs and lows, everything will be simple for you guys. Are you getting me? Because the 4 hour short-term highs and lows is what makes market structure more simpler. If you are trading the 4 hour short-term highs and lows, know that you are trading the daily candlestick. And if you are trading the 1 hour candles, 1 hour intermediate term highs and lows, which is called the SMC, know that you are trading the 4 hour candlestick inside the 4 hour short term. Are you getting me? Are you getting what I'm saying? And inside the long term 50M, 15 minutes, know that you are trading the 1 hour candles. Are you getting me? So let me make it more clearer. So the 4 hour short term, the 4 hour short term highs, the 4 hour short term highs and lows is the daily candlestick, and this 4 hour short term, 4 hour short term highs and lows represent the long term highs and lows on the 15 minute, and the 4 hour short term highs and lows represent the intermediate term on the 1 hour. Are you seeing it? But this is what makes market structure more simpler, by understanding it being marked up. Are you getting what I'm saying? So you understand. In the 4 hour diagram, you notice that the 4 hour market structure is just a short-term highs and lows in the market, while on the 1 hour market structure, there was a series of multiple highs and lows in the market before market structure shift. Same thing also apply with the 15 minutes chart. There was a series of highs and lows in the market before market structure shift. Are you getting what I'm saying? So it's very simple. So let's get to our trading strategy. Dive into our trading strategy. Before I dive into our trading strategy, let it clear for you guys, because you may be confused on what I'm talking about, but as time goes on, you understand what I'm saying. So we are going to look for the intermediate term on the 1 hour, and our entry model is going to be, once we are looking for our intermediate term on the 1 hour, we are trading the daily candlestick. Remember that, so that you can understand what I'm talking about. Once we are trading the intermediate term on the 1 hour chart, know that we are trading the daily candlestick. And once we are trading the 15 minutes time frame, 15 minutes chart on the, once we are trading the long term 15 minute strategy, know that we are trading the daily candlestick. So you understand what I'm saying? So it all depends. And if you are going to look for an entry at this model, you are going to use the 1 hour candlestick for entry purpose on the 1 hour, and you are going to use the 15 minutes market structure shift on the 15 minute time frame. My previous video, I made mention that intermediate term highs and lows is a reversal in the market. This is because when price makes a series of lower low on the highs and lows, either the 1 hour or the 4 hour, whatever time frame it is, know that time frame is intermediate term highs in the market. It's like making a lower low in the market, and after making a lower low in the market on the either 1 hour short term highs and lows or the 4 hour short term highs and lows, you notice there was a market structure shift. This is called, that market structure shift in the market is called intermediate term highs and lows. If market is retracing, that market structure can either fail, act as a liquidity, or act as a stop point in the market. You understand what I'm saying? So in this example, let me talk about it. Remember, when price was moving from highs to the lows, know that this is not a BMS. Like I said, this is not a BMS. The reason why I place this BMS, so that you understand what is break of market structure and what is not break of market structure. This is TC bullish. Are you getting me? TC bullish, which is called trend change. Remember, when price move from low to highs, look what happened. Remember this instance, this was a intermediate term lows. That is the reason why price could not break it, because it took out this short-term liquidity, which is called the BMS. Remember, this is where you look for your buy setup on the 1 hour candlestick, which is retracing into, and you look for 2 to 1 or 2.5. Are you getting what I'm saying? So this is the example 1 on the EURUSD. So this is intermediate term profitable trading strategy. Let's see more example on GBPUSD. This is the GBP US dollar example on the bullish setup. So price was busy making a highs and lows in the market, and what do you notice at this instance? There was a market structure change, which is called trend change in the market, which is called the TC. How do we know that this is a TC? Remember, I made it earlier that look at the way market structure behave at this instance. Look at the way it behave. Price creates a series of highs and lows in the market, but look at what happened. Remember, this is a trend change now. Price creates a high, create a lows, create a high, create a lows. Do you see trend change bearish at this instance? Price quickly create a high, but it could not take out this previous low. What do you see at this market structure? Price retrace and price keep on moving forward. Are you seeing the way price make a short term as a lows on the 1 hour time frame? So what happened at this instance? Retraced into the 1 hour intermediate term highs and lows on the 1 hour. Retraced into the intermediate term highs and lows on the 1 hour. What do? Remember, there was a market structure shift, but it could not cover the previous bearish candle, but it covered the previous candle before market. Notice that price could not cover the previous bearish candle, and this is also a reversal, which is called the pin bar, star pin bar formation. And you look for an entry at this instance, place your stop loss, target at least 2 to 1 arrow in the market. That was a profitable trade. Are you getting what I'm saying? That was a profitable trade in the market. It's very simple for you to understand this concept. So let's dive into our bearish example. Like I said in the market, that intermittent highs and lows is a series of reversal of short-term highs and lows in the market that form intermittent highs and lows in the market. So like if you see on this diagram, this is very simple. Create a series of high and create a low, create a high, and market structure shift at this instance by taking out this low, which make it a TC bearish. And what happened? Price take out this BMS on the downside. What do you notice happened? There was a series of retracements into the intermediate term highs and lows. What do you notice happened? This is when you look for engulfing candlestick on the 1 hour. Look at what happened. There was an engulfing candlestick on the 1 hour, which engulfed the star candlestick. For me, this is a setup that I must take because I noticed that price has retraced into the intermediate term highs in the 1 hour. I look for an entry at this instance. I look for at least 2 to 1 arrow, almost 3 to 1, and this is how you enter your profitable trade. And same thing also applies to this instance. What happened again? Price retrace into this 1 hour intermediate term highs again. What happened? There was a series of market structure shifts to the downside. What do you notice happened? Another series of there was no engulfing candlestick at this point. Look at what happened. There was no engulfing candlestick at this point. It didn't engulf the bullish candlestick. It engulfed it at this instance. You can also set your stop loss. Remember, this was also a hit at this instance, but remember that this previous high is still holding. What happened again? And you look for your entry model. Price take out this bullish candlestick to the downside, and you enter your target at least 2 to 1 arrow. I see how profitable this trading strategy is. Look at what happened. Price retracing into the intermediate term highs again, and what happened? You look for engulfing candlestick on the 1 hour, and you target at least 2 to 1 arrow. Are you seeing how powerful this intermittent strategy is. So it all depends on how you are trading this setup, because this setup is very simple and one of the most profitable trading strategy. Are you getting what I'm saying? So if you really enjoyed this video, please like and subscribe to Traders Mastering. Please, before I go, I want you, if you really enjoyed this video, please like and subscribe to Traders Mastering, because I'm going to talk about there's going to be a series of a video coming up, which is going to be the beginning of trading. It's going to start from, I'm going to start from the beginning of trading, how trading is being formed, and how you can be able to take part in the financial market to become a profitable trader. So this is one of the most profitable trading strategy I've reviewed on this channel. Please, if you really enjoyed this video, please like and subscribe and backtest this trading strategy before you use it in the financial market. See you other time. Stay tuned. God bless. Happy trading.